Hey guys, welcome to a new video. So today we're going to be talking about Hui from YieldMax and how it compares to HOOW from Roundhill. These are of course the Robinhood ETFs from YieldMax and Roundhill respectively, as that battle between the high yielding ETF heats up. So that's what we're going to take a look at today, because there's been some exciting news from Robinhood, and yes, that's what we'll be talking about. But of course, before we get into it, there was announcements of distributions for YieldMax Group B yesterday. So that was the likes of PLTY, which is very popular, NVIDIA, which is popular, and of course all your favorite weeklies. Now, I don't know about you, but for me, this was a little disappointing. I was expecting PLTY to come in at least $3. And I think most people were probably expecting that. So PLTY at $2.44, not great, a bit disappointing. NVIDIA at 64 cents, a bit disappointing. Even all these, not great. But probably the best one was Ulti, which is a lot of people's favorite YieldMax ETF, as it's weekly and it's been paying pretty consistently at high distribution rates. And that stayed above the 9 cent mark, which I think most people will be pretty happy about, considering what's happened in the market for the last week or so, although it's been green for the last couple of days. But I think staying at 9 cents for Ulti is good. So what does that look like for myself and my own portfolio? Well, NVIDIA 64 cents, like I said, not great, bringing in $272 of income for this week. PLTY $780 Australian net. This is after 15% withholding tax, which is taken from my brokerage because I'm in Australia, and so these are also net Australian figures here in the right hand column. And then LFGY, also disappointing. This has been over 40 cents, I think, from inception. It's usually so consistent, and it's dropped to 37 cents. That is a little disappointing, but crypto has been struggling a bit until this week, and hopefully things are going to start to pick up as we get into Q4 once interest rates get cut, hopefully in September 17th, 18th maybe, I believe. So we'll be keeping our eye on that, and I feel like Q4 is going to be big for crypto and for Bitcoin, so watch this space. I'm still holding LFGY. I'm still quite bullish on it, even though it hasn't been performing very well in the last few weeks, that's for sure. But yeah, a bit disappointing in terms of the distribution. Ulti, obviously a lot of people hold Ulti, and again over the 9 cents mark, which, considering the price, the actual share price has been down a little bit. I think that's quite a good result. That's still over an 80% distribution yield return, I believe. So pretty good, bringing in a little bit of income. And then of course I have my weeklies from Roundhill, which I'm now I've been rotating my funds, exiting out of YieldMax a little bit, just consolidating some of my favorite positions, and then reinvesting some of that funds which I'm rotating out of from YieldMax and putting it into these Roundhill weekly ETFs. Some of them I'm very bullish on, even though they keep falling, like MSTW and COIW, which is Coinbase and MicroStrategy. But there has been a good week for Robinhood, which is HOOW, which we'll be talking about. And of course, the Granite Shares Yield Boost ETFs, which just give such high distributions because they use a leveraged ETF to make income, or through option through their I think it's a put spread strategy that they use to make income, and they do it on a leveraged ETF, which means they're able to create much higher income because it's a riskier play. And so I'm in some of those, definitely riskier. Again, please, this is not financial advice, it's just my journey, my thoughts, what I'm investing in. Please do your own research. And then MST, that's been sucking because MicroStrategy has been tanking recently. But I'm still investing in it because I still fundamentally believe in what MicroStrategy is doing and Bitcoin, essentially. So Roundhill, very big, not Roundhill, Robinhood, sorry, big news this week because it was announced that they are going to be included in the S&P 500. As you can see here, Robinhood stock soared 16% Monday on news of the S&P 500 inclusion. Now, some people thought that MicroStrategy, there was big rumors that MicroStrategy had met all this criteria to be included in the S&P 500, but that turned out that they got snubbed. Essentially, that MicroStrategy is not entering the S&P 500, and that Robinhood will be, maybe not instead, because there's a couple of other companies that are also entering the S&P 500, but Robinhood is one of them, and so it went really high on that news. It grew 16%, the stock did, and so that was of course good for Hui, which is the Robinhood ETF from YieldMax, which uses a covered call strategy essentially to make income from Robinhood. And it usually, this is the distribution, the current distribution rate of just over 80%. And then of course we have the Roundhill weekly pay ETFs, which a lot of people seem to be switching to. A lot of people are now investing in. A lot of people waking up to, because they are leveraged ETFs. They are slightly riskier. They have a 1.2 times leverage position on the underlying. So they're looking to make 120% returns on that underlying. So they have a lot of them now, and I'm invested in quite a few. The Coinbase one, the AMD one, the Amazon one, the Robinhood one, obviously, the MicroStrategy one, and the Palantir one, and the Nvidia one. So I'm invested in probably more than half. But of course, we're talking about the Robinhood one. And so again, it is a 1.2 times leveraged ETF. So you have to be careful with that. What does that mean? If Robinhood goes up 10%, then HOOW will go up 12%. It has that 1.2 X leverage, so to speak, that 120% exposure to the underlying, to Robinhood. But what that means is if it goes down 10%, Robinhood goes down 10%, HOOW will go down 12%. So if Robinhood goes down 20%, HOOW will go down 24%. It is riskier. There is leverage involved, and that is something you need to know. Now, current distribution rate for HOOW is 56%, but because there's been big price hike this week, I think that's going to be a lot higher this week in terms of the distribution amount. But why HOOW? It is weekly as opposed to YieldMax's Hui is monthly. It's enhanced exposure, targeting 120%, as I said, leverage on Robinhood's weekly performance. And it's a combination of both single stock leverage and weekly income. You get that uncapped upside, which is what I really like about the Roundhill weekly pay ETFs, because the upside is uncapped, plus you get that extra little dose of leverage to get extra performance, and you also get weekly income on top of that. Now, that is a good thing if you're managing to buy low and buy well, but if you're buying at the top, you are going to feel it if it goes down. You're going to feel it even more. So these are considerations that you need to be aware of, because this is leveraged. If you buy at the top and the underlying comes down, you are going to get smashed, essentially. So really, please be aware of this. But I really like it because I like the uncapped upside of the Roundhill ETFs. Now, if we compare Hui so that's the YieldMax one, to Hu, let's just call it Hu, which is the Roundhill one, then Hu was launched about 3 months ago, when June 18. So we've got about 3 months of data to make it a fair comparison, Hui versus Hu. And if you look at this, you can see that Hu is winning the total return comparison battle, if you like. So HOOW Hu is up 58.23%, and Hui is up 40%. Now, obviously, Robinhood's been doing really well. Its stock's just been doing well in the market, so this is in a green period, and that's why the extra leverage is helping from the Roundhill ETF. That 120% exposure is helping it to get those extra gains, that extra income. So that's why it's up 18% more than Hui. And that for me is why I like it, because I want to be buying in the dips. I would be buying here maybe, and then it's easier said than done. It's not easy to buy the dips, but if it goes down more, my kind of general rule is if the stock goes down more than 3, 4, 5%, then I'm probably going to put a bit more money into it. If it goes down a lot, like 7, 8%, then I'll put even more money into it. So just depends on your strategy, but I'm always looking for dips. I'm always looking for downturns. red days are actually what excite me, because that's what presents good opportunities for good investments, essentially. So if we were just to take pure comparison on total return, Hui versus who, then yes, who would be the winner. But of course, this has been quite a green market for the past 3 months. For Robinhood, it's been doing well, so you've got to take that into consideration. If Robinhood stock goes down 20% over the next 3 months, then guess what's going to be down? Hui is going to be down massively, and Hui will, not do as badly. There's less risk involved, but there's also not as much. The upside for Hui, for the YieldMax ETFs, is capped, and that's what I don't love about them. I love the income, the distributions are pretty good, but the capped upside frustrates me a little bit, and that's what I like about the Roundhill ETFs. So this is a good comparison. So this is when we got the news for Robinhood that it was going to be included in the S&P 500 later this month in September, and of course the market loved that news, and Robinhood started going up and up and up. And so what happened? This is the Hui price action. This is not total returns. This is just the share price. Hui went up 12.7%. because it's capped, and Hui, because it's leverage, it's got that 120% exposure, went up 21%. So that's a big difference in share price, and that's why it's important to get in these low areas, these dips, if you like, so that you can try and capitalize on the upside. That's why I like the uncapped upside of the Roundhill weekly pay ETFs. Now, that's the same thing. Okay, so yeah, I mean, that's essentially it. So what have I got? I have got 232, sorry, wrong, that's the Ethereum one. Hui, 134 shares. So last week that paid out 74 cents, and I think that's going to be a lot higher this week, maybe hit the dollar mark, we'll see. But yeah, I have invested in the Roundhill one just because I like the uncapped upside of it. I don't have Hui on my YieldMax side of things. I've just gone for the Roundhill weekly pay ETF Hui because as I said, I like the uncapped upside, and I'm a little bit strategic with when I buy at it. My average price for Hui is 63.76. And I think it is currently trading at, let's see what it's currently trading at. Let's remove this. I think it's over 70 now. 69. I think this is pre-market. So I think it's over 70 now. And so my share price was down. If we go a bit further on, because it has dipped. I got in around here when it was dipping. I've got in a bit more. I think I've got in here, dipped again, a bit more here, and then I've bought in again. But my average price is still around the 22.5, 23 mark. And so now I'm positive on the share price. I've got increased price exposure or net asset value on the share price, as well as the hopefully increased distributions that come from this this price increase and this positivity over the last week. So let's see what happens, but yeah, that's just my thoughts on it. Loving the Roundhill weekly pay ETFs. It's been a bit volatile recently, so some of them are in the red, some of them are in the green, and also just getting more into these Granite Shares Yield Boost ETFs. I'd be interested to know if anyone is also getting into these guys, because they have just such high distribution rates, and I'm always cautious as to how they're going to maintain their net asset value when they pay such high distributions. But I'd love to hear your thoughts on that, and of course which one you prefer. Do you like the HOOW from Roundhill, or do you prefer Hui from YieldMax, which is probably a little less risky? Let me know which one you prefer, and what you think about all this in the comments. YieldMax versus Roundhill, what you like and what your strategy is, because I'm always keen to hear other people's side of things and what their journey is. And yeah, thanks for listening, and I'll catch you in the next one. Cheers.